The LLC. You might have heard it referred to as the ultimate tax shelter. In this video series, we're going to talk about these and clear up a lot of the misunderstandings around them. I want the objective of this video series for you, the viewer, to know more about how these things actually work by the time you're done than 80 to 90% of anyone else in your profession. So, the first thing we need to establish here is that there's a very distinct difference between a legal entity and a tax entity. You've probably heard terms such as sole proprietorship or S corporation. These terms refer to tax structures. The tax structures are recognized not by the state, but by the Internal Revenue Service. Likewise, statuses are granted by the Revenue Service. The LLC or Inc. or a variety of other legal entities is something else entirely. Your legal entity, such as an LLC, which is the most common in the current market, is established by your state. Your state gives you this limited liability corporation, and then the IRS has to assign that a tax identification. Now, if you're a solo realtor right now, you work by yourself, and you set up an LLC today, a single member LLC, from a tax perspective, nothing has changed. You're still filing as a sole proprietorship because in the eyes of the Internal Revenue Service, by default, a single member LLC is taxed as a sole proprietorship. However, an LLC can be taxed 4 different ways, and we're going to go into details about that in a later video. But understand, with 3 other possibilities out there, the sole proprietorship may or may not be the most optimal way for you to be reporting your income. Another form might make sense. So in the next video, we'll talk about some of the real practical implications of this and how it affects you. And then the final video, we'll talk about those 4 different ways these entities can be taxed and what some of those implications are as well. See you in the next video.